We've got an all-time high above $50,000. Emily, even you got a text from your dad.
Yeah, I was just gonna mention the text of the dad. He'll be on tomorrow to talk about his analysis.
breaking news. Bitcoin breaches $50,000. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Markets Managing Editor Lawrence Lewitinn and Global Macro Editor Emily Parker. What a way to kick off the morning, guys. No?
Yeah, that's it. Who needs coffee?
Emily, you got a text from your dad.
I got a news alert from my dad saying Bitcoin reached $50,000, and I knew, okay, we are officially mainstream now.
Awesome. All right, well, let's dive right into our top story of the day. At 7:30 a.m. in New York, Bitcoin hovered above $50,000 for minutes to a new record high of $50,584.85 before succumbing to those sell orders. The XBX Bitcoin price now trading at just below $49,000. It's still up about 1.5% over the past 24 hours. And Ether coming startlingly close to a record as well. Now the ETX Ether price trading at just $1,774. According to trade block data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. And our first guest is at the helm of a firm that claims to have launched the first Bitcoin ETF approved in the world. Joining us live from Toronto is Sam Saif, founder and CEO of Purpose Investments. Welcome, Sam.
Great to be here, guys.
All right, Sam, it's a great time to be in the Bitcoin business right now. But what is a Bitcoin ETF and how does it work? And what is a Bitcoin ETF getting you as an investor that you can't get by buying Bitcoin directly from a brokerage or even MicroStrategy, Tesla, which owns significant amounts of Bitcoin?
Well, I mean, first off, I think Bitcoin, if you're trying to get a pure play, you want to get the most efficient, the most secure way to do so. There's two ways to do so. One is to go buy it yourself. So you put up an exchange or go and get exposure and then put it in your own wallet. And those are, of course, things that lots of sophisticated people will do, or some people who work within the exchange world will do. But the reality is that buying this thing in your normal brokerage account, being an asset allocator as an individual or as an institution, this is a very difficult place to do that efficiently. And for the first time, we'll be bringing a first ETF, so exchange traded fund, the traditional elegant structure of the ETF, and eBitcoin brought together in a really unique way using physically backed Bitcoin. So actually every dollar in the ETF will be owning a dollar of Bitcoin backing it.
So what is better about this than just buying your own Bitcoin?
So first off, there's a lot of efficiency elements. So you talked about, call it this, your dad reaching out to you and kind of sending you a text about Bitcoin. The reality is that beyond the sort of the 10% of people who, will go through the purposes of opening up a Coinbase account or going through the efforts of mining or doing your own exposure and putting it on your digital wallet, most people, Bitcoin is non-achievable asset. It's not something that they can actually access. So this will be for the first time, make Bitcoin truly accessible to every investor beyond just going and doing it yourself and putting it onto your own wallet. And that is a very powerful element. It opens up every brokerage account, every investment account, every institution to be able to now access Bitcoin in that efficient way.
Sam, when does this hit the market, and are there any restrictions on non-Canadians buying it? And if not, how big of a market are you really expecting with this?
So it's launching Thursday on the Toronto Stock Exchange, the TSX. Like any other security, it is available for trading by any investor. It is driven and launched for Canadian investors as a Canadian fund. That said, investors around the world do buy securities both on any exchange around the world, so they can purchase this. But frankly, look, we're excited. I think the amount of interest and the amount of energy around this, being the first in the world to do this, I think it gets a lot of attention. I think we're getting a massive amount of inbounds and interest. I think it's going to be fun to get this thing into the marketplace.
So it seems to me that Canada has basically made history here, crypto history, because, in the United States, people have been struggling and trying to get an ETF for what seems like forever. How did Canada pull this off? Like, how did they make it through? Because in the United States, for example, one of the biggest concerns has been market manipulation, or that the market wasn't mature enough. I guess that second one now is maybe less relevant. But yeah, how did this get past Canadian regulators?
Well, I think it was actually working with Canadian regulators. So we spent the last 8 months confidentially working with the regulators to understand, what their challenges were and their hesitancies, but more importantly, help them kind of overcome that. It's funny, back in 2017, both in the United States and in Canada, there was a fair amount of players that filed for Bitcoin ETFs. And I've said quite bluntly, we were one of those players, but we said back then, if the regulator had actually allowed for them, it would have been a mistake. The infrastructure was just not there to support both on the custodial element, from the trading element, from the liquidity element, to support an efficient vehicle like an exchange traded fund. Now, today, it has. So much work has been done in the back end of this, the plumbing, to effectively allow for something like this. I think the regulators are comfortable with that. If you just think about it simply for a market maker, someone who has to make markets to ensure that the price of the ETF trades right in line with the Bitcoin price all throughout the day, that market maker to be able to use the liquidity functions that are in the marketplace through futures and other type of hedging is now available to them, whereas 3 years ago, that would have been extremely challenging.
So I think the question that's on U.S. I think the question that's on the mind of people in the U.S. is this going to expedite things in the United States? Like, how likely is this move going to be to lead to a U.S. ETF being passed sometime soon? What is your take on that?
Well, look, I mean, it's hard to speak on behalf of the SEC, but I would just say, this is a time. I think this is a good message that you want as a regulator to allow people to get access to something. If you don't regulate something, they're going to go get access to it anyways in any other way. They'll either go access it in an unregulated way, which of course opens up much greater investor risk. And then the second is they're also then going to go buy some vehicles like the Grayscale and other vehicles that are trading at big premiums or have traded at big premiums. And ultimately, these things, aren't in the best interest of customers too. So I think that giving people access in an efficient, regulated way is something that regulators should be urging themselves to do, given the fact that people want access to this asset.
What big concern that the American regulators still have that the Canadian regulators answered? I guess that's the big question. And how can you export that to the United States, to the SEC, for instance, that can address those concerns? Have you guys thought about doing that yet?
Well, I mean, look, I think that, the regulators do talk to each other a fair amount. And of course, it is in a global world today. I mean, trading is a global element. So I think that investors will be using this, and I'm sure a lot of the American issuers will use this as a sort of a bar to now go to the SEC and say, look, I mean, Canadian regulators got comfortable with it. Why can't we? Can we overcome that? We're not going to go and spend time with the SEC. We're not a registrar in the United States to do that. So we're not going to spend time with the SEC in the short term. But I do think that this is hopefully a really good push for the SEC to get there. Whether that happens in 3 months or 12 months or beyond, I don't know. But the reality is it's a push.
What do you have planned for ETH?
So we already partnered and built a vehicle a number of years ago, back in 2017, back when I got really excited about the space. We launched something called Ether Capital. So we've actually had the first kind of Ether direct version of access to something really unique in this space, trading on the Toronto Stock Exchange, or sorry, on the Canadian exchange. It's another exchange that trades on called the Neo Exchange that holds Ether directly, and also has Maker, one of the really unique stablecoin platforms, and then Wire, a very cool kind of onboarding platform and technology private company. And so we've actually really been focused on this space. We think the digital asset space is a really powerful one, and big fans of both Ether and Bitcoin for very different reasons, obviously.
But no ETF yet?
No ETF yet. I mean, look, getting a Bitcoin ETF was the first sort of hurdle to get done. It is, of course, the largest segment. It was the easiest to get the regulators to really get comfortable with. Second will be to work on an Ether product.
I understand that there are other ETFs in the pipeline in Ontario. So why was yours first?
Well, I think first, it was a lot of people file publicly in the last couple of weeks. We've been working with the regulators going back to last summer. So I mean, even though we weren't public with ours, we were private, and we were working through the process with them. And I think that gave significant lead advantage for us. But also, it was our work, our efforts that got the regulators to get comfortable. They used our work to kind of get the whole. We have a national regulatory structure that they all have to work together on this. They use our work to basically put the policy in front of them. And so that was really powerful, and so allowed us to basically be first to market.
Thank you, Sam, for your time, and congratulations on the Bitcoin ETF.
Thanks, guys. Appreciate the time.
All right, that was Sam Saif, founder and CEO of Purpose Investments in Toronto. Coming up, Bitcoin markets analysis with Ikigai Asset Management CEO Travis Kling. Welcome back. Checking in on Bitcoin. The XBX Bitcoin price trading at $48,795. Been weaving in and out of $49,000 there. Also, the ETX Ether price trading at $17.69. It's down just about 2.4% over the past 24 hours, according to TradeBlock data. Joining us now to discuss is Travis Kling, founder and chief investment officer of Ikigai Asset Management in Los Angeles. Welcome, Travis.
Thanks for having me. Good morning.
Good to have you, as always. So, big story today, Bitcoin breaching $50,000, huge psychological barrier. Where do we go from here?
In a single word, up, I guess I would say. Try not to go on these sorts of things and make too many price predictions, but Bitcoin's up 72% year to date after having a pretty enormous Q4 of last year. And all of that is coming on the back of, incredibly positive fundamental news flow for this space. And those hits continue to keep on coming. And potentially just, a week ago, we had what could arguably be considered the single most positive fundamental news event in Bitcoin's history, with Elon putting $1.5 billion of Bitcoin on its balance sheet. So, the assumption would be that there's plenty more, kind of room to run to the upside.
Travis, on a scale of 1 to Maxi, where am I putting my mom in her portfolio? What would you do?
I've been getting this question a lot from what we colloquially refer to as normies. And I like to tell them that Bitcoin is the only buy and hold crypto asset that exists today. And there's an incredible amount of really interesting innovation that's happening down market cap from Bitcoin. But all of the crypto assets outside of Bitcoin are venture bets. They have venture types of risks, and potentially and importantly, venture types of returns. ETH is a pretty classical venture bet. It's got a bunch of technological risk. It's not entirely clear when they're going to be able to evolve the technology to the point that it's and then on the relative to Bitcoin, Bitcoin has risks as well too, but those risks are not venture type of risks. There's still reasons it could not work, and it's still a binary bet to some degree or another. But it's not the type of venture bets that a lot of these other crypto assets have. And so, for somebody that can't pay a lot of attention to it all day, every day, just much easier to tell people 2 to 5% of your net worth, put it in Bitcoin. If you want to be aggressive, 10%, and buy it and hold it and never sell it.
So alongside Bitcoin, we're also seeing a DeFi boom. Are there any particular DeFi projects that you think are worth paying attention to?
Well, it's all worth paying a lot of attention to.
Anything in particular stand out as having just higher potential, or any projects in particular that you are personally bullish about?
Again, when I go on these sorts of things, I try and not talk too specifically about too many specific names like that. If you're not paying attention, you really should be. It takes a good amount of research and understanding just to get the kind of basic value proposition in conjunction with how the technology works. If you don't have a good understanding of how Bitcoin works, it's unlikely that DeFi is going to be something that's going to be particularly easy for you to get your head around. So it's kind of important to crawl before you walk. And Bitcoin should certainly be your first stop there.
Yeah, Travis, underlying the Michael Saylors and the Elon Musks of the world buying Bitcoin is this idea that inflation or rather the devaluation of the dollar might kick in with all the stimulus going on. So what if the stimulus doesn't bring the inflation that we expect? I mean, this happened, of course, during the financial crisis. We had a huge amount of stimulus back then. The inflation rate, at least the CPI, didn't hit the numbers that some of us expected. The asset inflation happened elsewhere. But what happens if it doesn't happen overall? What if the multiplier isn't where we expect it to be? Does Bitcoin become a bad trade?
Yeah, that's a really good question. I spend a pretty good amount of my time paying attention to that kind of broad direction of things. And to your point, I think what we know now, 12 plus years into quantitative easing, is that it doesn't really cause much headline CPI price inflation, especially in the context of how much other deflationary forces we're facing right now. And the two biggest ones are technology and demographics. In terms of technology makes everything cheaper to produce. And as populations get older, interest rates decline as there becomes an imbalance of the demand for capital relative to the supply of that capital. Now, we're 12 years into this, and the important sort of differentiating factor that happened in March and April of last year was we did start to cross the Rubicon in terms of, monetary policy, but now moving over into fiscal policy. So it's not just how the money is being created, but it's how the money is being spent. Quantitative easing, while simultaneously running increasingly larger deficits on top of increasingly untenable debt levels, that we've been doing for 12 years. That causes a lot of asset price inflation, right? To your point, it makes stocks go up, it makes real estate go up, it makes Ferraris go up, it makes fine wines go up, it makes courtside tickets go up, it makes sports franchises go up. Headline CPI price inflation, a little less than that. You pay attention to what the Fed is saying, and other central bankers around the world. They appear to be very serious about generating significant headline CPI price inflation while keeping nominal interest rates very low, such that you generate significantly negative real yields. And if you can do that over an extended period of time, then you can start to try and chip away at this debt to GDP situation that we find ourselves in. And that was the playbook that was ran on the back of World War II. And that's at least broadly what appears to be the playbook that they're going to try and run now. There is a sort of an important question to ask about how serious are they about generating 2.5+% headline CPI price inflation? How serious are they about that? From what they've been saying, it appears that they are pretty serious. But we need to be watching over the course of this year and as we move into 2022. And, don't get me wrong, Bitcoin the price of Bitcoin is intimately intertwined with monetary and fiscal policy. So the broad direction that we're going with all this stuff is important. And 2018, in the price decline that we had there, was in the midst of the Fed trying to end the largest monetary experiment in human history and to raise interest rates and roll off the balance sheet. But that ain't the world we're living in right now. And I don't have any expectation that's going to be the world we're going to be living in anytime particularly soon.
All right. Thank you very much, Travis, for your insights and your analysis.
Thanks.
Thanks for the time.
All right, that was Travis Kling, founder and CIO of Ikigai Asset Management in Los Angeles. Coming up, we head over to Europe for a look at institutional crypto adoption and checking in with CoinDesk regulatory reporter Nick Day.
I can't think of a more important story than this one to be telling. We're talking about the transformation of money itself. So to tell this story, right, the most significant story in finance that's around, we need new mediums, new ways to reach people, new ways to reach this global audience, the human beings for whom this is going to be most important. So this is why we're really excited to launch CoinDesk TV, because it's another way to reach people. It's another way to communicate. It brings to life the stories that sometimes can be difficult to access. This is a huge opportunity to tell a very, very important story that reaches a wide audience that has the potential to change everything. This is a huge opportunity to do this differently, and CoinDesk TV is going to sit right in the middle of all of that.
Welcome back. Time to check in with CoinDesk regulatory reporter Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick.
Hey, good morning.
Morning.
What's up, Nick? So your newsletter is right on point, talking about ETFs. We just had we just talked about this historic moment in Canada, the first ETF. What does this mean for the United States? Looking at the U.S. regulatory environment, how likely is this to lead to us finally getting our first ETF in the U.S.?
So I think it sounds like a very positive sign for a U.S. ETF. Of course, nothing is guaranteed, and the SEC's got a whole lot of other issues to be looking at right now. But everything, all the factors of 2021, the Canadian ETF approval, the fact that former CFTC chair Gary Gensler is being nominated as the next head of the SEC, these are signs that would trend positively for a U.S. ETF approval.
Can you just talk a little bit about what's changed over the past year or so in the U.S., putting the Canadian thing aside? What would make an ETF more possible now?
Yeah, a number of factors have changed. The U.S. market has really evolved a lot. So the last time ETFs were really hitting their peak, let's say hype, it was around 2018, late 2017. People were hoping for a ETF, but the market was kind of immature. There was, the futures market really only kicked off at the end of 2017. So right now we have a much more robust U.S. futures market. The actual spot market's evolved. There are new custodians that have entered the space. There are a number of new regulated entities. Even the regulators have evolved their oversight regime around the crypto space. So the market is definitely not the same as it was 3 years ago.
All right. Thank you, Nick, for your regulatory checkup.
Thank you.
All right, that was CoinDesk regulatory reporter Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. And our next guest is charged with leading Fidelity Investments' new push to sell cryptocurrency products in Europe. Joining us now is Fidelity Digital Assets Europe head Chris Tyre. Welcome, Chris.
Hi, guys.
Hey there. So, Chris, BNY Mellon and Deutsche Bank have announced they intend to offer crypto custody services. Are you nervous about the competition moving in?
No, not at all. I think that, this is a very positive development for the ecosystem. I mean, this market has a lot further to grow, and there's a lot more participants left to enter. I think that a rising tide lifts all ships, and I think that the introduction of further high-quality service providers to the space is a positive for everybody involved. So we very much welcome. Sorry, go on.
No, I was going to ask, who are the institutional investors you're dealing with? Are they family offices? Are they funds? And are you seeing any slowdown in their interest at all?
No, I mean, I would say if anything, we're seeing the opposite. So, we've been servicing institutions and corporates going back to 2018, but it's definitely fair to say that there's been a notable uptick in interest over the last couple of quarters. And that's really just been in line with the price, but also the macro environment that we find ourselves in, which Travis spoke very eloquently about. I would say, though, that we're definitely moving into a period where there's a greater diversity of clients that we're speaking with. And so we're really now starting to engage with some of the very large-scale institutions, such as pensions and insurers and so on and so forth. So I think that is a really positive development. The other area that I think is particularly interesting is we're starting to see a lot more intermediaries enter the space. So we think about the large banks and some of the interdealer brokers. I think the news out of the OCC last year, or the guidance, was incredibly helpful in sort of informing some of the discussions that we're having with them right now.
Let's just zoom out for a second, because we'd love to hear more about what's happening in Europe more generally. What is the regulatory environment like in Europe right now? And also, are there certain countries or cities that are emerging as being kind of the crypto hubs of the region?
Yeah, I mean, it's a complex situation. So the way that the regulatory environment has developed over here has been very much a sort of patchwork basis. What we have seen, which we find very encouraging, is the European Commission put out a draft proposal late last year, the what's affectionately known as MiCA, the Markets in Crypto Assets, which is a draft directive that would be the effective crypto asset equivalent of MiFID. And what that will do is it will create harmonization of crypto regulations across the EU. So to give you an idea of what it currently looks like, I think going back to 2016, 17, 18, a lot of EU members put in place local regulatory framework to give guidance to businesses and also to put in place consumer protection. But that's created a very disjointed regulatory environment. And so for businesses like ours, we need to do jurisdictional analysis in every single country that we want to operate in. And if we want to be pan-European, that requires 27 separate sets of legal opinion and so on and so forth. And not only that, we then need to refresh that and make sure that we continue to operate within regulatory guidance. And so this harmonization that should occur over the next, let's say, 12 to 24 months will be an incredible step in the right direction and allow a greater degree of freedom for businesses to operate throughout the block.
Chris, if you launch a Bitcoin index fund that we're hearing from Fidelity, how would it be different from what's in the market right now?
So I think, there's a difference in, so what we hear from our clients is that there are a number of ways that people want to gain price exposure to Bitcoin. And so some of that might be direct coin custody. They want to actually have legal title over the quote unquote physical asset itself. Other investors that we speak to would rather abstract away the security and perhaps the operational complexity considerations that they might have, and are willing to would rather hold hold shares in a vehicle that provides that price exposure, but in something that's more familiar and maybe requires less of a lift on their side. And so really the product that we put into market, or the Fidelity Digital Funds did, is really to cater to that emerging demand.
And what's
Chris,
the difference between just owning your own Bitcoin or gaining exposure by investing in Tesla and MicroStrategy directly?
Yeah, I would say that certainly I would say that Tesla, the allocation is still a very small proportion of their overall market cap, and so I don't know that would serve as a particularly good proxy for the Bitcoin price. MicroStrategy might be a slightly different question, but I still think that there's a high number of clients that would rather have that direct exposure and would rather have price exposure that's in a vehicle geared towards providing that price exposure.
Coinbase is the market leader when it comes to custody. We were just talking about custody here, and they're crypto natives. Fidelity, of course, a little bit older of an institution. It's an old Wall Street institution. So what makes Fidelity better or different than what Coinbase and the likes of a crypto native could provide?
Yeah, look, I mean, Fidelity is, we've been around for decades. We have millions of clients in the traditional space. We have tens of thousands of institutional clients. We built a product and a set of services really to cater for other institutions, knowing how, knowing what we require from our own. And so it's that, and what we've really tried to do is create a very high touch, high service model for a select group of clients. And when I say select, we're not looking to onboard millions of clients to Fidelity Digital Assets. We're really focused on providing a very focused service to a number of institutional investors in the hundreds.
Great. Thank you so much for updating us, Chris, on what's going on in Europe.
Okay. Thanks very much.
Thank you.
All right. That was Fidelity Digital Assets Europe head Chris Tyre. Time now to check in with the crypto Twitter tweet of the day with this viral video of Lily, a 3-year-old who takes a stab at explaining Bitcoin from its decentralized nature to its limited supply to how to custody the digital asset with a wallet. So over the past 20 hours, Lily's video has gotten 1 million views. Children are our future. All right, that's it for First Mover. Coming up, our next show special guest. Our next show tomorrow will be with Shapeshift CEO Eric Voorhees. Thank you, Emily Parker, our CoinDesk Global Macro Editor, and Lawrence Lewitinn, Markets Managing Editor. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming at noon is The Hash. You're watching CoinDesk TV.